Good morning, friends. Time for the market update or trade plan for 8th of July 2020. Okay. Now, yesterday, the markets had I would say, strong dip early in the morning, and then we bounced back from 10,670 sort of zone. The key feature from yesterday was the lagging financial sector has come back. Now, my sense would be that there is some psychological shift in the way people are looking at the financial sector. Why? Because there have been two or three results which shows that things are probably not as bad as was getting priced into the financial space. So there is a catch-up act which is going on and which could lead the bank nifty towards 23,500, and it will also take the nifty towards 11,000. So that is my base case. A bit of advice to my followers. Often what you can hear on media, social media, this media, that media, is views on the market. And believe me, the views do not make money. If you don't have a strategy, the views are useless. These days, it's fashionable to say this is a trap, the market is going to turn, get out. All of this is dumb advice. Nobody, including me, knows where the market is likely to go. Okay. This, 200-day moving average, and that is going to stop the market. This and that is all humbug and rubbish. That will only make sure that you lose money from here to 11,000. If you could pinpoint with this accuracy what is going to happen, then there was no problem. Let's be clear on something, that major strong trends do not turn in a single day. Okay, they continue to go much longer than these rookies would have you believe. The benefit of to keep saying that market is turning, is that one day it will turn, and then you get on your I told you so mode. I told you so mode. Beware of this sort of advice. Money is made by dumb people who just keep riding the market till the very end. And like I told you over the weekend, that figuring out tops is not a charting activity. It is a activity where you have to judge the public sentiment. To say that all of India is now invested in the market is rubbish. Yes, people are day trading, etc., but it is not a euphoria. Okay, so I would like to be on the long side till a vaccine is developed. So that is my broad take on the market, take your own decisions, do your own research. Don't go by he said this and she said that. Let's have a look at what are the charts showing. Yesterday's action was extremely positive, and what you can make out from there is that if the bank nifty, which was the underperformer, also gets on the action, then the market will find very clear support. Reliance came off about 2%, but that was very easily compensated by the banks. I think this is beautiful action. All candles are closing towards the high point of the day. This is the daily Nifty chart. So there is no problem at all here. Okay. Where do I want to put my stop? I want to put a stop at 10,650 thereabouts, which is the yesterday low. Okay. Now let's have a look at Bank Nifty. Again, very pretty looking chart, and we have crossed this high, which was an important high, about 22,500. I think you could have followed through. Now, yesterday we got into the Bank Nifty just before it started to rally. So let me just show you what we saw. See, the market was coming down, and we were watching and watching and watching. Now, see what happened here. We started to see that the Bank Nifty had stopped making fresh lows, and it was in this box. Again, we started to get a cleaning out of this red candle. Somewhere around this zone was where we bought a call. Why? Because if anything is not making a fresh low, then chances are it is turning around. So we bought the 23,000 July, 16 July call, and it just rocketed. So very important point, if you are trading intraday, wait for these sort of consolidations to happen, and then wait for the market to break out in this zone, because we didn't know when we started that the Bank Nifty was ready to break out today. But since morning, ICICI Bank was higher, Bajaj Finance was higher. Everybody was talking about how good the results of Bajaj Finance was. So I was, you know, expecting a macro shift in the psychology of the market. So when this sort of pattern started to happen, basically, the idea was clear that something is changing. Now, who buys these private banks? Not you and me. It is the big institutions. So it was clear that FIIs are buying today. So you have to make these quick judgments and go with it. So for the moment, what I believe is that on a daily, weekly basis, the bank nifty is ready to get you big action. Overnight markets, Dow was down 400 points, but it was up 400 day before also. So on a weekly basis also, the bank nifty has broken out. Now I keep telling you where I buy calls and where I sell uh, calls or options. Excuse me. So yesterday we were short on 10,500, 10,600 puts, and uh, obviously they were put spreads. So as the market moved up and we closed above 10,700, those put calls gave us over a 50 to 60% profit. Now, buying options is an art. Why? Because option buying works only 30% of the time, and the movement in your direction has to be sharp. So option buying should be done when the market is in a corner, which means like the bank nifty was a very ranging instrument and which has broken out yesterday. Okay. So the option buying became a valid strategy because from a narrow range, when something breaks out, that is a sign that it is going to break on the upside. So this was the larger range which has broken out on the bank nifty. For the day, I expect private banks to do very well. All kinds of NBFCs, financials should do very well, and this kind of mood will continue till the bank nifty at least performs as well as the rest of the market. So till yesterday, I was wondering where the next bit of rally will come in. But I think with the bank nifty move, the market is in safe hands. So basically, on the pivots for the day, support zone is 10,696 to 10,731. Resistance zone is 10,801 to about 10,836. On the bank nifty, support zone is 22,242 to 22,423, and resistance is at 22,783 to 22,964. And I think we will get to the top end of this resistance today itself on the bank nifty, and by virtue of the bank nifty move, the nifty will also move higher. So the advice is be long, stay long, and the market in very short order, in my opinion, should be at 11,000. So don't go by all this humbug advice which is going around. Take profits, get out. Market is going to come down. Market is not going to come down at a 35-point discount at a place where people are still busy trying to tie the economy with the market move. As I've said, market moves have nothing to do with the economy. So I think with this Bank Nifty expansion, and I just showed you what an expansion means, that you have a narrow box and from there things break out. So I guess that should be it. Take care, trade well, and please consult your financial advisor.